in early January 2026. As winter storms swept across New York and traders gathered before glowing screens, a silent force began rewriting the rules of global finance. Gold, the ancient metal of kings and crises, started climbing at a pace not seen in generations. Within weeks, headlines flashed across America. Wall Street buzzed with nervous energy, and ordinary families began asking a question they had not asked in years. Is gold about to change everything again? The story truly begins years earlier, in 2020, when massive stimulus, historic money printing, and global uncertainty quietly planted the seeds of this moment. By 2022, inflation surged, interest rates spiked, and confidence in traditional assets began to crack. Investors like Ray Dalio warned that the world was entering a new monetary era, where old assumptions could no longer be trusted. Central banks from China to Brazil started stockpiling gold, preparing for a future that felt uncertain and unstable. In 2024, geopolitical tensions deepened, supply chains fractured, and trust in paper currencies weakened. Gold crossed $2,000 an ounce and held its ground, sending a message that the market was preparing for something bigger. Then came 2026, and with it, a storm of economic signals that ignited the metal into a historic surge. The Federal Reserve faced slowing growth, rising debt, and political pressure, creating a perfect environment for safe haven assets to shine. As the US dollar wavered, gold pushed past 2,600, then 2,800, and finally approached the psychological barrier of $3,000. In trading rooms across Chicago and New York, veteran traders compared the moment to the 1970s gold boom and the 2008 financial crisis. For investors like Paul Tudor Jones, gold once again became a shield against uncertainty and inflation. Major institutions including JP Morgan and Goldman Sachs released reports forecasting sustained demand driven by central banks and retail investors alike. Mining companies such as Newmont and Barrick Gold saw their stock prices surge as capital poured into the sector. In Nevada, miners worked overtime, reopening older sites and expanding new operations to meet global demand. Across Texas and California, small investors rushed to buy coins, bars, and ETFs, hoping to protect their savings. On social media, young traders shared screenshots of profits, turning gold into a trending topic once more. But behind the excitement lay deeper forces shaping this historic rise. Record government debt in the United States raised concerns about long-term currency stability. Geopolitical conflicts in Eastern Europe and the Middle East added fuel to the fire of global anxiety. Technological shifts, including artificial intelligence and automation, disrupted labor markets and widened economic divides. All of these forces combined to drive investors toward assets that could not be printed or digitally created. Gold, with its 5,000-year history, stood as the ultimate symbol of trust. By March 2026, gold dominated financial news, overshadowing even the hottest technology stocks. Television anchors compared charts, analysts debated price targets, and economists warned that this was more than a temporary spike. In Washington, policymakers quietly monitored the surge, knowing that rising gold often signals deep economic stress. Across the Midwest, families hedged their futures, converting small portions of savings into precious metals. In Silicon Valley, venture capitalists diversified portfolios, adding gold alongside cutting-edge technology bets. On Wall Street, trading algorithms chased momentum, accelerating the rally even further. Yet history reminded everyone that gold booms are never simple stories of endless gains. In 1980, gold soared to record highs only to collapse in the following decades. In 2011, a similar surge faded as economic stability returned. The difference in 2026 was the scale and complexity of global challenges. Climate risks, energy transitions, demographic shifts, and digital currencies all reshaped the economic landscape. Bitcoin and gold competed for the title of ultimate safe haven, yet many investors chose both. Central banks continued buying gold, signaling a long-term strategic shift away from dollar. China, Russia, and several emerging economies accelerated reserve diversification, reshaping the balance of global power. In America, this raised concerns about future inflation and geopolitical leverage. Still, gold's appeal remained simple and timeless. It offered stability when everything else felt fragile. It offered certainty in a world of constant disruption. And it offered hope to those who feared losing control over their financial destinies. By mid-2026, gold approached historic highs, capturing the attention of every major financial network. Stories emerged of families paying off debts, retirees rebuilding savings, and entrepreneurs funding dreams through timely investments. At the same time, cautionary tales surfaced of over-leveraged traders wiped out by sudden corrections. The market reminded everyone that opportunity and risk always walk side by side. Economists debated whether this marked the start of a multi-year supercycle in precious metals. Some projected prices beyond $3,500, while others warned of inevitable pull. Yet few denied that gold had re-entered the center of global finance. For young investors, the rally became a lesson in patience, discipline, and long-term thinking. For seasoned professionals, it reinforced the value of diversification and historical perspective. For policymakers, it signaled a warning about debt, inflation, and monetary stability. For everyday Americans, it offered a reminder that financial security requires preparation and awareness. The deeper lesson of gold's 2026 surge lies not just in profits, but in perspective. Markets move in cycles, but human behavior repeats patterns of fear, greed, and hope. Those who study history and respect risk are better prepared for the unexpected. Those who chase hype without strategy often pay the highest price. Gold's rise teaches that stability, patience, and discipline remain timeless principles. It shows that real wealth grows from informed decisions, not emotional reactions. It reminds us that uncertainty can create opportunity, but only for those ready to act wisely. As the year unfolds, the world watches closely, waiting to see if this rally becomes a defining chapter of modern finance. The future of gold will depend on inflation, policy decisions, technological shifts, and geopolitical stability. But one thing is certain: the metal has once again proven its power to command global attention. In a digital age of instant transactions and virtual assets, gold has reclaimed its ancient throne. It stands as a bridge between past and future, tradition and innovation, fear and confidence. And as investors reflect on this extraordinary journey, a single question lingers in the air. Are we witnessing the birth of a new precious metals era, or simply the calm before another financial storm?